Today is Saturday, 11th of February, 2023. We always start with our disclaimer, go over our calls, and then make some predictions. So let's do that. This is my trading plan for next Monday, which is February 13th, 2023. Please remember my calls can be wrong. Any trade you make should be at your own risk. We said unless we gap down smartly, we had a higher target for Friday of 4,107.56. We gapped down smartly, so the call was killed before the open and there was no call. This is what we said. These are the patterns I look for next week. Monday's pattern should have the early high. During the day, MEJT said this rally was false, price would retrace, said these drops were false, price would retrace. That's already happened. We gapped down, hit a lower low, closed over all the lows, even over the last low we had Friday. That's a rejection of the lows if it can be maintained early Monday. So unless we gap and promptly undercut this low, we should see higher prices Monday. I think it's unlikely that happens because it's unlikely we undercut the low because there is support from a prior FOMC price right here. And there also is a wave count here which justifies this leg being over. We'll show that later. My long-term count has us in wave red C of black 2. I think when it's over we'll have a good rally because this whole decline was overlapping and overlapping declines retrace at some point. But prior to that happening, this 200-a-day moving average is going to have to stop dropping, flatten out, and then curl up. Until that happens, it's pretty hard to get something powerful on the upside. Let's look at what's happening here after this wave C began. I'm counting it this way. We have an ABC down with good fibs. We have an ABC up with good fibs. And this first leg down I'm counting as an ABC with good fibs on multiple time frames. So I think that leg's over. That's A of C. We now have to make a B and a C. So this is the A and this is the B. You want C. Now let's go to a larger time frame. The colors aren't the same, but just ignore that. Here's your wave A. Here's your B. You want C and A to have some kind of Fibonacci relationship. So we'll take the Fibonacci grid. We get a variety of possible Fibonacci targets for wave C down, all the way down into the 3850s. Any one of these is a reasonable price target. You can see how we hit one of the targets right at Friday's low, which is additional support. Now, we don't know the degree of these waves here, but if this is an ABC going down to one of these prices, we would like the C wave we're in to have some kind of fib relationship to the A wave. And it turns out if you set A at 61.8 and you measure 100% from the top of B, the end of B, you get the waves balancing out around the 39.90 area. And just because that price works doesn't mean some other price won't, but there is Fibonacci balance of the waves around 39.90. You would have wave red C having a relationship with this A, and this larger wave C having a relationship with this A. Now if we are making a smaller degree ABC here, once again you would like the C and the A wave to have some kind of relationship. So if we set this to be 61.8 and we're making B, if C were to top around the 41.40 area, the waves would balance once again. So we have one possible pattern where we hit 41.40 and dropped to 39.90. It works beautifully. It doesn't mean it's the only one that works, but it's a reasonable plan to look for changes in trend at those prices. But I think I take things a day at a time, and for Monday we have a pattern with the early high. Doesn't mean you won't gap down. Typically it's a rally day with a high in the final hour, and if you fail, it's a straight line drop. We gap down, hit a lower low, but we closed over all the intraday lows, and if that can be maintained, then Monday's open. Should lead to higher prices. Doesn't guarantee a higher close, though. Regardless of what happens Monday, I think at the minimum we're going to trade under 4,000 cash before the current move down ends, and after that I think we'll see a strong rally. But as I've said, we still have a little bit of work to do with that declining moving average. So Monday's pattern has the early day, tends to be a rally, failure is a straight line drop, but so far we have support, rejection of the lows, and I'm looking for higher prices as long as we can hold these lows, and that is today's call.